Daniel Martin here in the Wehrly Group. We want to talk about some long-term care solutions for you today. As we all know, this is a growing concern. We have a lot of clients that really showed a lot of interest in this because unfortunately they've had family members that they've had to deal with that have been in this situation. I myself dealt with my dad with some dementia. David and Patrick also dealt with their moms having to do some situations. So we have a little bit of a personal touch with that. So we want to make sure that we can give you some information to help you out, that hopefully it can guide you in the right direction. So let's just go over a few facts first to talk about a few things. Surprisingly, insurance claims, unfortunately, have gone up dramatically over the years because the baby boomers, as they're retiring, are running into more issues with, as we've talked about, dementia, Alzheimer's, Parkinson, and just incontinent issues and other things. You can see the big jumps as we've gone to 2018, 10.3 billion in claims. Which fast forward to 2021, that was up to $12.3 billion in claims just on this. Now, this is just in the Texas area that we're talking about here today. So that's a huge amount of money that was paid out. So insurance claims, when do they normally begin? A lot of people ask us at what age should we really be prepared for this? Well, as the statistics show, between about 75 and 90 is when the majority of the claims go out. They begin going out. We don't want to wait till then because the cost of the claim would be too high, right? So we want to just make sure that you can get it early enough so that when the claim comes through and they have to start filing for it, well, it's more affordable at that time. Let's put it that way. As we all know, the older we get, the closer we get to that claim, the higher the risk factor, the more expensive it's going to be. So make sure you understand that that's a big window right there that we have to try to cover, 75 to 90. So if we can get you going by about 55 to 65, that's kind of the ideal age that we can hit that window there at about the most affordable timing of getting your long-term care solutions, right? So where does it usually go? More and more, this has been changing over the years. In 21, 73% of the folks were able to stay at home because they had a long-term care solution that paid for home health care. So we all want the comfort of home. None of us like to be away from our home, especially in our later years when we're having problems. Anytime there's a memory care issue, we've seen that that's really a big burden if they have to change locations. They never really quite adapt back to where they're going. So movement is hard, change is hard on those folks. So if you get a policy that will afford home health care with the same amount of coverage, then it'll really make a huge difference that we've seen a large impact in people's lives. Again, nursing home is only 9%. Usually that's somebody that just went off quick, right? They're full incontinence and they need a nursing home. So usually folks are needing long-term care, but they're needing it for a longer amount of time. Excuse me. But they're wanting to be comfortable at home. So make sure that you get a solution that will be able to afford home health care. Most of your old traditional long-term cares, they needed to be in a nursing home, right? The older ones. Then they finally opened it up to some assisted living. And just in the last 15 years, 20 years or so, have more of them started really being opened up to just about any type of care as long as you needed the ADL requirements, right? So why does most long-term care claims end? And this is kind of unfun to talk about, but unfortunately most of them is death, right? About 20% actually recover from whatever the situation may have been. So they were able to get back off long-term care for a while and get moving forward. Some of them just flat exhausted their benefits. In other words, they didn't have enough coverage, right? So they may have had it for 25 months, 30 months, 36 months, something like that, and they just outran it, right? So they outlived their coverage. So if you can get with an affordable solution that can give you a lifetime coverage, that's ideal because then it can take you all the way till, of course, the end and take that financial burden away until you pass away and take that burden a lot of times off the next generation. That's unfortunately what we've seen is we've had a lot of folks that saved well. They were really prepared for their retirement and they could have made it all the way through if they had not hit a long-term care solution. So one of the other things we found a lot of times is whenever this either runs out or they didn't have it, what happens is the well spouse, the one that was in better shape, taking care of the sick spouse, ends up getting in worse shape than the sick spouse and may even pass away before the sick spouse. So it really creates a huge financial burden on not only that couple, but as the family as a whole. So anything we can do that can kind of lighten that load, we want to try to give you solutions to that. Now, another big thing is in Texas, if you notice, the claims from 2015 to 2020 went down dramatically. Well, this went down because of the fact that COVID took out so many, unfortunately, so many of our elderly folks that the policies weren't used, right? But I think we're getting past that situation, but unfortunately we cleaned a lot of older folks out that really didn't get a chance to live as long as they were supposed to because of this nasty, nasty disease, and it's unfortunate, but that's why this number drops. As you can see, it dropped about 40,000 in policies that we had during that time frame. So that's kind of a scary fact. So on to a few solutions. Now, y'all probably have seen a few of our videos or talked to us in one-on-one. You're going to learn that we believe in tax-free retirement. We're a tax office that helps with financial planning, kind of. That's the way we look at it around here. So we look at tax advantages anywhere we can for you. Now, a lot of folks out there have huge IRAs or 401ks or 457s or some sort of retirement plan that's all qualified money. So we're always looking at a way of using that qualified money to your advantage to get as much tax-free out of that thing as we can. Well, one of the solutions is we're able to use some of your IRA dollars to put into a long-term care. So let's say that one of the spouses has a large IRA and the other one doesn't. Well, that one spouse can use their IRA money to get long-term care coverage for both spouses, right? So in our example here, you could take about $180,000 out of your IRA over time, right? You could put about 150 of it into this product because the other 30,000 is going to go to paying the taxes. It's all qualified money. And in that, so it equates to about $18,000 a year for 10 years. And what that equates to is a $176,000 death benefit. So less the taxes that we were going to have to pay anyhow, we're taking 150 and turning it into 176 day one, right? And so in case something were to happen, it has that nice death benefit. It also has lifetime, we talked about the importance of that, long-term care benefits, and $63,000 a year per person for life, right? That's a huge benefit, right, to these families. So we can take some of those long-term care dollars that we really need to be positioning in the right position anyhow for that long-term care, but pay the taxes up front and take a big benefit. Now, if you don't use this, it has that nice death benefit, right? If you do use, but you only use a portion of it, it still goes down to your heirs, whatever's left over, right? So you never lose any of the value. It's not the old use it or lose it style policies and things like that. So we always look for advantages like this. We can certainly run an illustration for you to see what your situation may be. Now, I will say with long-term care, again, it's all built off of risk, right? Anything that has to do with insurance, right? We all should know that by now. So if you're healthy enough, you get a better policy. If you got a few issues, we can probably still get you some coverage. If you have too many issues, we probably can't get you a long-term care policy like this, but we do have some solutions that can get you some coverage, at least partial coverage out there, right? And so we want to make sure that you see that there's ways of taking some of that qualified money and work it to your advantage for tax-free payouts, in either in long-term care or in death benefit to your spouse or kids. So another thing we have is there's kind of the way of looking at things is there's a kind of an a la carte. How would you like to pay for this and stuff? So if you have a premium that you can't afford to put $150,000 in one time, like in our last solution where you paid it over 10 years, well, you can break these down, but then we can give you just plain coverage for a few months. We can give you that coverage with a long-term, with a additional time frame. We can set them up to where you got lifetime coverage. We can do lifetime coverage with inflation up front. So there's different ways of designing this. We just have to figure out what can fit into your budget and your needs, you know. If you have a family that has a long history of long-term care needs, well, we may want to really look in depth into this thing about getting you a little better coverage. If you think it's kind of, we may not, we just want to have coverage, well, then we may lighten it up a little bit. But again, we base everything off of individual cases. So we want to talk to you understand you better, your need, your budget, and things of that nature to make sure that we get you what's appropriate for you. Again, we can pay it all in a lump sum. The difference in that is it has the immediate death benefit like the other one, but it takes less premium, less money to get better coverage, right? Because they're going to have your money. And remember, these things do accumulate cash value, right? So the longer it's there, the more cash values it's there. So if for some reason that you decided that you needed to take some cash value out of this thing, tax-free, well, it would just readjust your coverage. Now, we don't suggest that. We would probably try to find another solution, but if that's an in solution to something, then that's something that we can talk about. So, in just kind of summarizing and wrapping things up here today, I just want to thank you for stopping by and talking and understand a little bit more about long-term care and seeing if there's anything that we can do for you, or at least getting the idea in your head that you may actually need to look further into it. You're free to call our office. Our number is going to be at the end of this video. You can come to our website and you can schedule a meeting there. You can do a Zoom meeting for those folks that are still a little uncomfortable about talking face to face. We'll be glad to share it with you. We don't cost anything for consultations. We'll be glad to tell you what we can do for you and show you the outcome, and then hopefully we'll be able to do something for you. So until the next video, have a great day and be blessed. And we want to help you get to your path to success through your retirement. God bless.